Alright, hey guys, so yeah, that's me. Basically today was a really tough day. But yeah, I learned a lot still. So I will start on the daily chart and just break down where I took the trades I took and yeah, what I learned today. So basically, the only important level on the daily chart for me is the wick above here, and yeah, we have a new higher time frame, so like a new daily opening gap, and yeah, I think that's it. So like all the other levels or high time frame gaps are already marked out. So dropping down to the 15-minute chart, important to me was we had also like daily buy side liquidity, but coming into the opening we were basically overbought from NFP. So today was NFP, and yeah, really higher and also respected consequent encroachment and the upper quadrant of the daily wick. So that's an important level. And for me, always, if we above all opening prices, we are just way too overbought. So I don't want to buy such expensive prices. We are looking for shorts, and maybe looking or dropping to the 5-minute chart. We have if we take on the sessions, you can see we have still we scrapped London lows, and we still had a huge 5-minute wick, so that's a big imbalance. And also like the opening prices right here. So what I liked about the opening is the fact that we ranged here, and then with the opening we traded higher and basically broke like out of the range, and that's like a short-term run and stop. So basically all the retail trader who are already chasing shorts are getting stopped out here and are also thinking that we can trade even higher, because all the price action right here is only higher. So in that case, I like to see the fake out higher, and I anticipate that we will trade even lower. So the problem with that is, or the problem here is, I entered already here, and I think that's actually a valid entry. So for me, that's basically the ATM model from Jermaine. I don't know if you know him. Look him up, he's very good. And basically, for me, it's like the here I mitigated because trading view was lagging, so I sold 4, but I only wanted to short 2 contracts. But basically we had a big range here, so yeah, that was a huge problem for me because I got stopped multiple times. But that is also as a result from the news, because as you see on the news calendar, we have Friday, so non-farm payroll, NFP, and also like at 10 a.m. we had we did not 10 p.m. was it President Trump speaks. Nevertheless, we ranged a lot in here. So actually I was wrong. I thought we had news at 10 a.m. So that's why I thought that the price range here is resulting from the news, because I thought that we can only spool after the news. But with that now we just, yeah, I think that that's a valid entry. It's a bit weird, the price action right here, so it's not unexpected to getting stopped out, but I think I should have been way more patient. So basically right here we drop way lower, and then we can see we create this little fair value gap, and then we trade into the break, and then I wanted to see a reaction, and we traded lower, and I like this actually, and I entered here as well, so that was like the last try, but I closed already here because we created SMT with ES, so that's like ES already took out the low, but NQ didn't, so that's basically the problem for me, because SMT always indicates that we could reverse at this point. So, and I also didn't like how price reacted to the breakaway gap. I wanted to see that basically we don't close above consequent encroachment of the breakaway gap, but we closed above consequent encroachment, and yeah, that's just not the resistance runs we want to trade. But in this case, actually it's the wrong decision. So because if we basically SMT is a indication for a reversal, that's true, but in this case we have a clear objective. So basically it is so obvious that we will trade lower. We have clear targets. We have the sell side liquidity from the New York open kill zone, and we have also equal lows right here, and also the fact that we are way above all opening prices just shows to us that we can trade way lower. And in that case, SMT should not be to be expected as a indication for a reversal, but it should be expected that we are short-term more bullish. So in that case, it is okay that we close above consequent encroachment, because ES already took out the sell side liquidity and is retracing a bit. So NQ follows, and therefore we didn't close below consequent encroachment, but close above, because it's just more bullish. But if we have like difficult trading conditions like that in high resistance, we just have to wait and be more patient and trade for wider stops. So basically, if I could have held onto the trade, it would have been really nice. So basically, I think my first target was like, I don't know, you can target the liquidity right here. You could target the opening price, but I don't really like it because I think it's way too in the middle. So we have the sell side liquidity, and then we have like the big targets like the midnight opening price and also like the sell side liquidity down here. So that would have been really nice to get. But yeah, nevertheless, I learned a lot from it. So definitely we have to be more patient and also like regard SMTs way different. So that's a big important lesson. So then we traded all the way lower, and we entered long within the London close macro, macro, I guess. And yeah, here I basically got brutally stopped, and that's just the fact that we or basically that's due to the 1 hour or higher time frame chart. So as you see here, we have all like a low resistance liquidity run up, and that means that also a low resistance liquidity to the downside can follow. So in that case, it's a bit foolish to expect a retracement. I expected a retracement on the lower time frame, so I expected like a short-term run-up, maybe to the higher time frame gap right here. But we are just too bearish on the higher time frame, because all the liquidity we reap right here doesn't really count. So basically, it's just not the important levels for NQ to reach. It's only like that's high resistance liquidity, and there's like balanced price, or there are balanced prices, so there we can find support. I don't know, but yeah, that's just important to think of. still on a lower time frame, I really like this setup, and it's a bit unfortunate that it doesn't play, or that it didn't play out, but yeah, it's just what it is. So, and then right here at 11:10 we traded into or into consequent encroachment of a hourly wick, and we also swapped sell side liquidity, and therefore we can retrace higher. So basically that could have been your long opportunity right here, and targeting higher prices. So what do you target? Targeting higher prices, I would always recommend using the price range of 10 a.m. So basically you look for the high which formed after 10 a.m. and measure the consequent encroachment with the low. So basically what that looks like to me is like, here's consequent encroachment. So basically we want to target liquidity which lies in the best opportunity. It is in a premium, but most of the time, especially if you have like weak retracements, you can expect that we only will trade to consequent encroachment and then we will reverse, and that's actually what happened. So I wanted to wait that price trades above the higher time frame gaps, because that's always like resistance. So if we want to trade from below it, above it, it's resistance, or when we are above the higher time frame gap and we want to trade below the higher time frame gap, that's also resistance. As you see right here, that's the high time frame gaps are always delivering support, and we are just stuck in between this range, between the balanced price range right here and between the high time frame gaps. So price can't really trade out of the range. But actually I really like this long right here, so I got in after we closed above the gap, and then I added right here. Actually, that's the down close candle looks really scary, but that's actually really nice because it's like a fake bear flag. So I see it like a short-term run on stops, and then I want to see big candles to the upside, and actually that's what we got. So my mistake here was that I expected we would trade even higher, and I wasn't really aware of the right target. So for example, I didn't realize that we have like this big balanced price range, or like not really big, but it's just important. So especially because you see like how the other candles are also reacting to the levels, especially right here, right, to consequent encroachment, and that tells you that the level is just important. So we can also recognize the candles right here, so the bodies are respecting consequent encroachment as well again, and therefore with reaching 11:45, so with the beginning of the lunch macro we reverse we reverse lower and also continued lower. So basically the rule for me, or how I see it, is if we are in trading conditions and the London close macro is already delivering higher prices, so against the trend. So the London close macro is already seeking buy side liquidity and running on stops, because retail is trailing their stops lower and lower and lower. So we retrace and we sweep the liquidity above here. So in that case, if the London close macro already swept buy side liquidity, you can expect that the lunch macro will continue lower, so will continue with the trend lower. Will continue with the trend, in that case lower, but yeah, will continue with the trend. And you see, with reaching 11:45, we got this big down close candle, and then we got stopped. So eventually, if I had my targets right, this would have been a nice trade. And to be honest, everything that follows afterwards is just it's just bad. I don't know what to say, but basically my thinking was that we could trade low from here, so we still had obviously lower targets to reach for, but we are way over sold now because we are way above, way below all opening prices. So we don't want to look for shorts in this case, but maybe also like an important lesson to learn is that if your setup doesn't play out, don't chase the other way. So in that case, for example, longs didn't play out, but it's not the right decision to look for shorts either. So that's very important to get in your head. But yeah, so basically here's where we are just trading within this price range, between the balanced price range and the higher time frame gap. So yeah, that's basically the biggest mistake. I think I'm content with the loss right here because it's like on a lower time frame, it just looks super clean. But regarding the higher time frame with the 1 hour candle, it's maybe not the best choice. I knew that. And I wouldn't like to trade the longs right here because I don't want to trade against the higher time frame gaps. So that's like, it's not clean enough and I don't like it. So basically, with that in mind, or being aware of that we already traded higher with the London close macro, I could have maybe took a nice scalp right here with targeting the balanced price range. But yeah, it is what it is, and I think the important lesson for me is basically to be way more patient, to don't to overtrade, and also like in that case to use SMT way different. So to close the closer position is not really wrong. I mean, you can do it, and I think many traders do value SMT very much, but I think it's always depending on which trading conditions you are. So yeah, basically that's it. That's my breakdown. A tough day. I don't know what to say, but I think I still learned a lot, lost a lot as well. But yeah, see you in the next one.